Gold and silver will ultimately benefit from Russia's decision to stop purchasing gold at a fixed rate and instead at a negotiated price. Even though I thought I was only going to do one Russia video and get out of the game, it seems like the game pulled me right back in. This video ignores the politics of the Russian-Ukraine war in order to focus on how the decisions on both sides have led to even more bullish conditions for silver and gold. This video focuses on how recent decisions are creating even more bullish conditions for physical holders of metals. Once again, I brought the receipts just in case. So let's talk about it. Before I jump into this, one, I want to remind you to stay at the end for the comment shout out. Who knows, it could be you. And two, I'm going to try another disclaimer because after reading the comments from the last one, it's apparent that I wasn't clear. So let me try this again. One, this video is not about the politics, morality, or human rights of the situation. We at Stackers are apolitical. We are only discussing this in the context of the economics and specifically precious metals. If you really want to know how I feel about the situation, send me an email. This is not the venue or purpose. And lastly, I am removing all of my personal feelings and baggage because my role in this video is to provide information that hopefully helps you with your investing. If you didn't see the last video, ultimately I shared that Russia's move to buy gold at around 1880 was about a couple of key points. About increasing the value of the ruble, it was about supporting domestic miner gold sales, creating domestic demand, and increasing Russia's gold reserves. During that video, I shared, and I quote, "Do I care if Russia is going towards a gold-backed currency? No, not really, because there are far more important forces here," which is where I will pick up from. Just to be clear, Russia never said they were going to a gold standard. I heard all kinds of comments about this was the shortest lived gold-backed currency ever, and Russia was going off of the gold standard. I want you to ignore all the nonsense you and I have heard and all that stuff that's being pushed. Russia pegged the ruble to the value of gold. So from my vantage point, Putin and Russia accomplished exactly what they wanted. They needed to have the ruble rebound in price, and they needed to deal with the gold not being available on the open market. And they did. And to quote a creator I see on TikTok, Conscious Lee, it's all about, quote, research over me search. So let me show you. Here are some quotes from some articles, and there will be a slide at the end where you can get all those particular links. Western sanctions have devastated Russia's economy since the war in Ukraine started. And for a while, the ruble was hit hard, losing roughly 20% of its value in the first few weeks following the invasion. Since then, the ruble has risen back to pre-invasion levels. In February, the ruble collapsed from 79 to the dollar to as low as 139 to the dollar. On Friday, just a few days ago, the ruble was back at 77 to the dollar. The recovery came following Russia's actions against Western sanctions, including forcing companies to exchange 80% of the foreign currency for rubles. Economists and analysts have attributed the rise to a few choice chess moves Russia has played in recent times, like surprisingly announcing the ruble would be backed by gold. Again, it was not being backed by gold. I think the link between the ruble and gold is intended to transfer strength and credibility from gold, which is a symbol of stability. People still have the nostalgia to the gold standard. They perceive money as being tied down to gold, so it can't inflate. And there are a few other quotes, and I'm not going to read every one to you, but with a recovering ruble, Russia is looking for a better price to buy local gold at. With the higher currency, 5,000 ruble now translates to $63. Which then would make gold around $1,940 or so. I just want to drive home the point that they had a mission that they were trying to accomplish, and they did. It was to keep the ruble from falling further, to increase the domestic consumption so that Russia would not have to use secondary markets and take less for their gold. So now here's the interesting part. So why did Russia stop? That's the really interesting part. Well, as you read from those quotes, one, the ruble rebounded, and two, their increase in ruble eliminated the discount from the bank. So if Russia were to continue buying at that current rate, it would actually result in a situation where those outside of Russia would send gold into Russia, which is not what they were trying to accomplish. At 80 rubles to $1, gold is right around the current spot earlier, which was around 1940. Today, as of right now, gold is hovering right around 1970. They addressed the need to sell the gold. One bank reported that they sold a 1 metric ton of gold in the month of March. So here's the interesting piece for me. While the buying of gold solved one problem, Russia still has another urgent need, which is cash. And here's a quote from Jeff Christian, and I know he's not popular in some circles, but hey, information is information and truth is true. And he says, the Russian government is strapped for cash. It's facing the pandemic that everybody else is facing. It still has sanctions. It doesn't have a lot of foreign exchange coming in, and it's losing money on every barrel of oil that it's sold in Russia. Jeff Christian continues with, now the Saudis have started an oil price war with the Russians. Russian average oil price production costs about $42 a barrel. The price of oil has been below 30 since the price of war, so Russia is losing money on every barrel it produces on average and sells. If you find this information helpful or informative, please go ahead and hit that like button for me and also drop a comment. So what does all this mean? What does this mean for gold and silver? That's the bottom line. That's the whole point. For me, it really hasn't changed much because I told you I was very bullish in the first video. In fact, this latest move actually makes it better for physical metals. And here's why. Domestic demand will only continue in Russia. Russia will continue to feel the pressure of sanctions. Sanctions are going to impact the entire world, starting with energy, oil, and natural gas. The continuing war is only exacerbating everything from supply chains, but especially inflation. We just saw this morning that CPI here in the United States was around 8.5%. Another key point is issues with Russia are contributing to the inflation in the United States. I shared that our CPI just recently was 8.5%. There's also here a link to an article that talks about how the Russian-Ukraine war is driving up prices here in the United States. Again, incredibly bullish for us, which resulted in the price of gold going up $20 per ounce. We are seeing other countries in financial distress. All of these issues abroad will eventually make it to us in the form of precious metals demands, as people around the world will start to seek safety in metals and other commodities. We know this. This is historical behavior. So not only will prices go higher, getting your hands on metals will become more difficult, and we're already starting to see this. Ultimately, you have to make your own investing decisions, and predictions often tell you more about the predictor than the prediction. But to me, all of these points are absolutely bullish for metals. And while I don't feel the need to go all in, as there is a decent possibility of a pullback to 1920 in gold, or maybe even 23 or $22 in silver, which are some of the support levels, I'm not willing to take that chance at this moment. I think it is better to have and be in early than late and scrambling. If there's a pullback, then great. You, and we get to buy at a discount. Where the metals are going now, that $30 to $50 difference will mean nothing. And so you've heard me say over and over again about how you have to minimize premiums. Given everything we know, given the disruptions in the supply chain, understanding that the US Mint can't even get blanks and needs to make coins, and how hard it is for dealers to keep things in stock, I would submit to you that this may be one of those times where you just have to bite the bullet and pay the premium. I know that goes contrary to a lot of things that I've shared. Now, I don't mean go out and start buying American Silver Eagles. I mean getting the lowest premium you can, but using what time we do have to start stacking harder. If you look around, nothing about what's going on in our world tells me that precious metals are going to go down. You don't have to take my opinion for it. Just do the research. What I am suggesting is there is a window here. It is open, and we need to take as many shots as we can, or we need to stack as hard as we can. Again, My personal opinion is this may shape up to be one of the most tremendous cycles for precious metal, and a very massive amount of wealth will be transferred when this is all said and done. So stack on. Make sure you have your seatbelt on, because I also think it's going to be a bumpy ride with a lot of twists and turns. But it's becoming clearer where this ride will end. Much, much higher prices this year and going forward. Please leave a comment on how you think all this will impact gold prices and even inflation. Does it make you more or less bullish? How long do you think before we will see the ultimate impact? After you comment, go ahead and hit that red subscribe button. Why? Because Stackers University is a community of learners that cover the topics of investing in precious metals with educational, entertaining, and informative videos. 3 times a week, you can find videos just like this that are intended to help you become a better investor and increase your returns. I don't want you to miss them, so subscribe today. If you missed the original video, I will link that at the end, and you should definitely check out the 8 essential reasons why you should stack now, because in that video, I go into greater detail about market indicators and conditions. I'll link that video as well. And before we get out here, I want to do the comment shout out. This is for Throckmorton. And I know I'm supposed to be doing the most recent video, but I gotta tell you folks, this comment really touched me. Throckmorton wrote, "Wow, outstanding analysis, sir. You bring necessary clarity, logic, reason, and clear thinking to your videos. This is truly educational. And to those of us who are new or playing catch up, a profound thank you from me for helping to motivate me to protect myself and my family. God bless you and yours." Gotta tell you folks, I love this. I love doing this work. This is why I started this channel, to try to get rid of the nonsense and provide good information for people like you to be able to learn and grow and be able to increase your ability to stack and increase your returns. So Throckmorton, thank you, my friend, for the comment. It really touched my heart. I couldn't do the most recent video. I had to do this one because it just really touched me. So thank you so much. That's what it's about over here at Stackers. This is what we do. I want you to remember 2 things. It's research over me search around here, and always stack smarter and never stop learning.